Hello and great welcome. So this is going to be your second session of Ind AS 103 business combination until up to question number 2 of section 1 we have already done. So today we are going to begin our session with question number 3 of section 1. This question has been taken from June 23 examination, and when this question struck in the examination, it carried actually 14 marks. So just pay attention down over here. Given below are the extract of the balance sheet of S Limited and P Limited on 31st of March 2023. Figures are in crores, and here you are being given balance sheet of S Limited and balance sheet of P Limited. We will see later on actually that P Limited in this particular case is going to be your acquirer entity. Acquirer entity. P Limited is your acquirer entity. We will see that later on, and your S Limited will be acquiree entity. Acquiree entity. Correct? Now, here you have seen that, and in fact, you are watching down over here that P Limited is having one column of balance sheet. These are some items in the balance sheet. Whereas as far as S Limited is concerned, some balance sheet items are given. Besides that, fair value of the item is also given. So we now begin with first item, that is equity share capital. As far as equity share capital is concerned, one share is of rupees 10 each. Total share capital of what we call acquiree entity in this particular case is 8,000 crores. Now, if I'm going to actually divide 8,000 crores by rupees 10, that means total number of shares of S Limited is 800. 800 into 10, that is 8,000 crores, quite obviously. And likewise, total share capital of P Limited will be 12,000 divided by 10. That means P Limited is having 1,200 shares of 10 each, correct? Besides that, and in fact, no fair value is given with respect to equity share capital, and no fair value of other equity. The reason being is that generally the fair value and the balance sheet value of equity share capital and other equity remains same. Now, if fair value is not given, we shall always presume that fair value is also equal to 8,000 and fair value of other equity is also equal to 6,000. So next item is other equity of S Limited is 6,000, and of what we call P Limited, it is given to you as 4,000. Now we come over to borrowings. Now just pay attention down over here. As far as borrowings is concerned, 2,000 is written in the balance sheet column, while its fair value is given to you as 2,050. Now fair value of borrowings is equal to 2,050, and we did a question last time actually wherein I talked about what we call fair value changes. So obviously this time fair value of this item is changing, and you are the acquirer entity. Ultimately you will have to take over all the assets and liability. Now this item borrowing, which is appearing in the balance sheet at 2,000, you will have to take them over at fair value. So in this case you will have a loss of 50 because the value of liability is going up, so it is a loss to you. Is it clear to you? Similarly, with respect to trade payable, you can see balance sheet item is 2,500, whereas fair value is 2,400. Now in this case it is a gain to you because the fair value is lesser than the balance sheet value. Now coming over to the assets, property, plant and equipment. In the balance sheet of acquiree company, 9,000 it is written, whereas its fair value, as you can see, happens to be 10,000. So in this case, quite obviously, you are having a gain of 1,000. Similarly, we have investment property. What is investment property? Investment property is one which is held by an enterprise either to earn rental income or for the purpose of capital appreciation. That is known as investment property. Anyway, investment property is 5,000 and its fair value is 7,000. Now the value is going up, so it is a gain to you, 2,000. In case of investment, so S Limited might have done some investment. So investment is equal to 1,000. No fair value is given. So we shall presume fair value is also equal to 1,000. In this case, there is no change. Now, current asset is equal to 3,500. But its fair value, as you can see, is given to you as 3,200. So in this case, there is a loss to you to the extent of 300. Now, the next point is, and it is very important, this is contingent liability. Now, if I am going to ask you, What will be the effect of contingent liability? Some of you may be tempted to say that in the balance sheet it is given 800 and its fair value is 750 because the fair value of the liability is less, so there is a gain of 50. Some of you might say so, but this is not the case. You must understand that, and I have already talked a lot actually in the last session, that contingent liabilities are never ever shown in the balance sheet. Even though it is given in this way just to confuse you, but at the same time to test you. So you should know actually that contingent liability which is given as 800, actually this is not written in the balance sheet. That means contingent liability is written in notes. You must understand, because contingent liabilities are never ever shown in the balance sheet. That means acquiring company is having a contingent liability and its book value is 800, but its fair value is 750. And I've already told you, because you are the acquirer company, you will have to take the contingent liability. That means you are taking over a liability which is not appearing in the balance sheet, so it is a loss to you. And I told you in the last session, if you remember actually, that all the contingent liabilities will be taken over and recognized as liability at fair value. That means you will have to take over this liability at 750. So it is a complete loss to you. At whatever value you are going to take contingent liability, that will be a complete loss. What I mean to say is that in this case, you are having a loss of 750, not a gain of 50, because you presume that in the balance sheet nothing is given and still you are taking over this liability at 750. So that is why it will be considered as a loss. So this is a pretty important point, correct? Now we move to the next part of this particular question. And remember one thing, in this particular question, actually balance sheet is not given in a complete manner, in a formatted manner, correct? Just some information, some extract is given to you. Further, it is given that market price of equity shares of P Limited and S Limited are 16 and 15 respectively. Now, in this question, you are also given that market price of P Limited, which is acquirer company, is 16 and of S Limited share is 15. This is the market price of one share of P Limited and S Limited. Also, it is given that you are supposed to actually pass journal entries in the books of P Limited. That means in this particular question, you are not supposed to prepare the consolidated balance sheet, but you will have to pass the entries on the date of the acquisition. Further, it is given that P Limited acquired 75% stakes in S Limited on 31st of 3/2023. P Limited balance sheet date is given to you as 31st of 3/2023. You must have noticed. So on the balance sheet date, actually P Limited this time is acquiring control, and acquiring control by acquiring 75% stakes in the other entity, and purchase consideration is settled by issue of 800 crore equity shares, for which no accounting effect has been given. Now, if I am going to ask you what is the amount of purchase consideration, your answer should be very simple, because it is given that P Limited is issuing 800 shares. And because I am the purchasing company, I am the acquirer entity, I am supposed to deliver the purchase consideration. When I am going to deliver the purchase consideration, I will deliver it according to fair value of my share. So fair value of our share is equal to 16. So 800 into 16, whatever we are going to get, I think it is equal to 12,000, something like this. So 12,800, correct? So 12,800 will be your purchase consideration. 800 shares. It is given very clearly, we are offering 800 shares. So 800 share, we are going to issue at the rate of 16, because in this question, in this particular question, market value is also given of the respective companies. So you are going to multiply it with 16. So your purchase consideration will be equal to 12,800, number one. Number two, since you are issuing shares this time to discharge the purchase consideration, that means the purchase consideration is being discharged through issuance of the share. Another important line here, it is written, no accounting effect has been given. Even though if this particular line would not have been given over here, I would have always presumed that the effect of this one is not yet given in the balance sheet. It means whatever shares which we have issued against what we call getting control over the other entity, that amount is still not reflected in the balance sheet, and generally that is always the case. Further, it is written that non-controlling interest is measured at proportionate net asset value. Indirectly, it means on PSNA basis. So how you are going to solve this particular question? So this is the question which came in June 23 examination. I will solve it for you, and also pull out your pen, pencil, register. And although I have given complete and full solution, still I would love you to actually make a habit of writing in that class. If you will develop this particular habit, then definitely it will hold you in a very good state. So let's begin what we call the solution of this particular question. Section 1, question number 3. Section 1, question number 3. Now, first of all, in this particular question, the information which we are given, one is with respect to degree of control. Degree of control. What we mean by degree of control? Because it is given that P Limited has acquired 75% stakes. So that means P Limited is having 75% control over the acquiring entity, and rest of the control is in the hand of the other shareholders known as NCI. That is what we mean by degree of control. Is it clear to you? Although it is not necessary to write it this way around. Then next one, obviously date of acquisition. In this question, the date of acquisition you must have noted is given to you as on 31st of 3/2023. So date of acquisition. Date of acquisition. Your date of acquisition in this particular case is 31st of 3/2023. This is the date of acquisition. Allow me to have a sip of tea. It's pretty cold and chilly out here. Okay, obviously now the next question is, what is the amount of purchase consideration? As it is given in the question that you have acquired 75% stakes, and for the same you have delivered some consideration through issue of 800 shares at the rate of 16. Although it is not given at the rate of 16, that you will have to imply out, because in this question market price per share of both the respective companies in fact is given. So purchase consideration. In order to find out purchase consideration, what I will do, I will simply multiply 800 shares, because we are issuing 800 shares, and we will issue these 800 shares at the rate of 16. The point is this: at the rate of 16, and it will be equal to 12,800 crores. All the figures are in crores, rupees in crores. You must write in the examination. Rupees in crores. Is it clear to you? Right, sir. Obviously, now the next question is, whom will be the accounting acquirer? Although, to be very honest with you, I have already told you 99.99% the legal acquirer remains the accounting acquirer. But still, I want you to make you proficient in this particular step also, accounting acquirer. Although it is not needed, but still, accounting acquirer. I want you to learn this, accounting acquirer, and become proficient. In order to determine who will be the accounting acquirer, we know who is the legal acquirer, because we are investing in the other entity. Quite obviously, we are the legal acquirer and the other entity is legal acquiree. But who will be the accounting acquirer? In order to determine that, as I told you in the last session, first of all, we are going to take into account group's share capital. Group's share capital. Group's share capital. Group's share capital. And I'm writing number, that means number of share. What we mean by group's share capital, I told you in the last session also. Whenever we write group share capital, it means number of shares of legal acquirer. Number of shares of legal acquirer. Who is the legal acquirer? P Limited. Number of shares of P Limited. Now, group share capital basically implies the total share capital of what we call legal acquirer. Legal acquirer is P Limited, and we have already seen that in the balance sheet, share capital of P Limited is given as 12,000. 12,000 divided by 10 is equal to 1,200. So 1,200 shares, first of all, I am going to write. And we have just seen that in order to discharge the consideration, P Limited has issued 800 shares, because this time the purchase consideration is being discharged through issuance of the share. So on account of that, what will happen? On account of that, share capital of P Limited will increase, and now we can say that total number of share is equal to 2,000. Total number of shares of P Limited is equal to 2,000 without an iota of doubt. Is it clear to you or not? Now the next point is that out of these 2,000 shares, now we can say out of these 2,000 shares, How many shares are held by P Limited and how many are in the hands of actually S Limited? So in this case, P Limited, out of these 2000 shares, P Limited is having only 1200 shares because 800 shares have been issued to actually S Limited. So 800 shares are in the hands of S Limited. But in spite of that, you can see more than total share capital is 2000. More than 50% shares are in your hands. So quite obviously, you will be the accounting acquirer. Accounting acquirer. So P Limited will also be the accounting acquirer. Is it clear to you or not? Correct? Although this step is not needed, to be very, very honest with you, but still I want you to become proficient in it because this is the area wherein I've seen actually students are not having as much of proficiency as they should have. Correct? So now we move over to step number 5. Now in this particular step, generally, whenever we solve the question, generally the first step is to find out the net assets on the date of the acquisition. But before that, because in this question some information with respect to revaluation or fair value changes is there, so first of all I'm going to write that. You can write revaluation or fair value changes, whatever you may like to write. So I simply write revaluation, or you can write fair value changes, whatever you may like to write. Correct? So we have already seen that with respect to borrowings, in the balance sheet, the value was 2000 and its fair value was 2050. So there is a loss of 50. So in case of borrowings, there is a loss of 50. But in respect of trade payables, we have seen that there was a gain because in the balance sheet, the value was 2500 and the fair value is 2000. So that is why there is a gain of 100. And investment property. In case of investment property, I told you investment property means a property which is kept by an enterprise either to earn what we call income through renting it out, or they want to earn income through capital appreciation. Correct? That is known as investment property. But anyway, investment property in the balance sheet is 5,000. Its fair value is 7,000. So in this case, again, there is a gain of 2,000. Then property, plant and equipment. Property, plant and equipment, 9,000 in the balance sheet and fair value is 10,000. So again, there is a gain of 1,000. You are going to write here 1,000, isn't it or not? And current asset. In case of current asset, there is a loss to the extent of 300 because the fair value is lesser than the balance sheet value. First, let me actually add it out. Net amount will be equal to 2750. But at the same time, I must not forget to write the contingent liability, less contingent liability, because I am the acquirer entity. I will have to take over your contingent liability and I will have to take it over at fair value of 750. So at whatever value I am going to take contingent liability, that value itself will be a loss to me. So 750 I am going to subtract again. So I may say that on account of fair value changes, there is a net revaluation gain of 2000. Is it clear to you? This sort of question we did in the last session, correct? Anyway, so now your first step is over technically, although it is step number 6. Now your next important step is that you will have to find out the net assets on the date of the acquisition. So I will write here net assets on the date of acquisition. Net assets of S Limited, that is acquiring company. Net assets of S Limited on the date of acquisition. As you know, in order to compute the net assets, I've already told you we are not going to follow net assets approach, that is asset minus liability. We will follow equity approach. As per equity approach, I have already told you, in order to determine the net assets, first of all, we take into account the equity share capital. Now, equity share capital of S Limited, as we can see in the balance sheet, it is given as 8,000. So I'm going to write here 8,000. Equity share capital is equal to 8,000. And then other equity. Other equity given is 6,000. So I'm going to write here 6,000. And because of fair value changes, a reserve got created. I will write revaluation reserve or fair value reserve, whatever you may like to write. Equity means equity share capital plus all reserve and surplus. So revaluation reserve. Revaluation reserve is equal to 2000. Is equal to 2000. So by adding all these, I will get net assets of S Limited on the date of acquisition. That comes to actually 16,000. Correct? 8 plus 4, 14 plus 2, 16,000. So total net assets is equal to 16,000. Now you have determined the net assets also. Now, step number 7. Under it, actually, you are going to find out NCI, correct? So I am going to write here NCI. And in this question, it is clearly written that NCI need to be found out on the basis of proportionate share of net assets. So NCI on PSNA basis, PSNA basis. So NCI on PSNA basis means proportionate share of net assets basis. And in order to determine NCI on PSNA basis, what we do, we take into account the net assets, that is 16,000, and we simply multiply it with the proportion of the NCI. Our proportion is 75%, 25% is the proportion of NCI. So we may say that 4,000 is NCI. 4,000 is NCI means on the date of acquisition, whatever net assets your acquiring company is having, out of that, this much of asset, 4,000 worth of asset actually belong to NCI. Now next point is 8th point. Suppose I want to know share of net assets, share of net assets of acquirer company, share of net assets of acquirer company. Share of net assets of acquirer company. So how I am going to find out? I've already told you, first of all, I will write net assets. Total net assets on the date of acquisition of acquiring company is equal to 16,000. I have already told you, even in the last session, I cautioned you, never ever commit this folly or this mistake by directly computing the share of net assets of acquirer company, because some of you may tempt to do in this manner. You may think actually 16,000 is the net asset and 75% is our proportion. We should straightway compute that. Although in this particular question, no answer will not get affected, but at the same time, it could affect, correct, especially when NCI is measured on a fair value basis. So that is the reason whenever you need to find out share of net assets of acquirer company, always follow this approach. First write the total net assets. Some internet lagging is taking place. Okay, first always write the net assets, and then after that you subtract the NCI. NCI we have already computed is equal to 4,000. NCI is equal to 4,000. Is it clear to you? So NCI is 4,000. Now I will write here 12,000. So now I can say share of net assets of acquired company is equal to actually 12,000. Just allow me 1 second. Actually, there is some technical problem. Just wait. Allow me a second or so. Yes, now it's okay. So that was distracting me a lot. So we have found out the net assets and now we have already taken the share of NCI, and with the help of NCI share, now we are able to find out the share of net assets of acquirer entity. So now we are also in a position to find out the amount of goodwill, correct? So in order to find out goodwill or gain on bargain purchase, goodwill or gain on bargain purchase, goodwill or gain on bargain purchase. Actually, in order to find out goodwill, what generally you do, correct? I have already told you, in order to find out the goodwill, we will take into account the net assets. Net asset is equal to 16,000, correct? And we will pluck out the share of NCI, that is equal to 4,000. And whatever balance is there, that balance represents the share of acquirer. And then we compare it with the what we call consideration. In this case, consideration is equal to 12,800. I can directly find out goodwill in this manner, 800, by comparing the share of net assets with the consideration. I could have found out it that way out, but I want you to actually move through these steps to find out the goodwill. Is it clear to you? Actually, we can find out very easily this way around, but I want you to present it. That means in order to find out goodwill, generally we compare the amount of consideration with the share of net assets, correct? So in order to determine the goodwill, first I write here consideration transferred. Now consideration transferred we have already seen is equal to 12,800. So I'm going to write here 12,800. This is the amount of consideration transferred. And I'm going to compare it with share of net assets of acquirer. Now share of net assets of acquirer, that means P Limited. Share of net assets of acquirer entity we have already seen is equal to 12,000. Now the amount of consideration, as you have noticed, is 12,800, which is higher than the shares. So quite obviously in this case there is goodwill. So goodwill is equal to 800. Is it clear to you? Now you can pass down the entries because this is exactly what question wanted you to do. Correct? Entries. On the date of acquisition, now you will have to pass the entries. In order to pass the entry, actually, first of all, you will take over all the assets and liabilities. Correct? I have already told you all the assets will be recorded and all the liabilities will be recorded at fair value. So you will write here all the assets which you have taken over. For instance, you have taken over current asset and the fair value of the current asset is equal to 3,200. Similarly, you have taken over investment. Now the fair value of investment is not given. So whatever value appearing in the balance sheet, correct, you will consider it as the fair value, that means at 1,000. Investment property is having a fair value of 7,000, so you are going to write 7,000. Besides that, property, plant and equipment having a value of 10,000, fair value 10,000, correct? Then I will intentionally leave a space and I will write the liability side items. Over there we find actually borrowings are given to us, so I'm going to write here borrowings. Amount of borrowings, fair value actually is 2050. Then trade payables. Trade payable is 2,400. In the balance sheet it is written as 2,500, but fair value is 2,400. And you must not forget to write here contingent liability, because you will take over the contingent liability and you are going to record it as a liability. That is why it is a loss to you. Contingent liability you have taken over at a fair value of 750. That means so far you have noted down total net assets which you have taken over. And then you, as a rule, you should now write to NCI. Now share of NCI we have already seen is 4,000. Correct? And now you write the amount of consideration to consideration payable. Now consideration we have already seen is equal to 12,800. So I'm going to write here 12,800. Now if you are going to balance it out, you are going to get goodwill. Goodwill will be equal to 800. So you could have driven goodwill straight way by writing the entries. Is it clear to you or not? You could have written it that way around too. Now, as far as entries is concerned, the main entry is this, and you need to actually pass another entry. The next entry is for payment of consideration. Consideration payable account debit. Consideration payable account debit. 12,800 is the amount of consideration which you are supposed to pay. 12,800, correct? And then you are going to write here to share capital, because this time you are offering shares. But important point is that you are offering 800 shares. So you will write here 800 into 10 first, because the face value of the share is actually 10. Correct? So I'm going to write here 8,000. And I'm issuing the share at the rate of 16, that means at a premium to 2 security premium. I'm going to write here 800 into 6. That will be equal to 4,800. 4,800. So this is how I'm going to solve this particular question. I have already told you, actually, we need not require to prepare consolidated balance sheet. It is neither asked nor it can be prepared, because balance sheet in a formatted manner is not given in this particular question. So after having done this particular question, you must have noted that in section 1, actually, there is another question which I have given to you, correct? This is another question, and this question has been taken from MTP June 2023. But we'll do this question later on. The reason being is that actually this question, before we do this question, we need to actually do a topic. So that is the reason actually I'm not doing this particular question right now. We'll do it later on, correct? And you do not attempt it. Unless and until I ask you to attempt a particular question, never ever attempt it by yourself. Now, as you must have noticed actually, we have in our notes given you what we call section-wise, topic-wise questions. So next section deals with questions related to goodwill, non-controlling interest, and gain on bargain purchase. To be very honest with you, you can do these questions of your own very easily. Very easily you can do all these questions of your own. I know. But the point is that lots of questions in the examinations are being asked from this particular topic, especially under MCQ section. So that is the reason you need to be very proficient with respect to such questions. So we start with 2.1. I know that you are in a position to manage this question of your own, but still I would love you to actually pay attention, correct? So 2.1. In this particular question, it is given to you that FX Limited acquires 100% of MX Limited for rupees 9,60,000 rupees. FX Limited is a company and it acquires 100% of MX Limited for rupees 9,60,000, and the fair value of MX Limited's net assets at the time of acquisition amounted to 8 lakh. Now, in this particular question, you must have noticed that you are acquiring 100% control, number one. You are acquiring the control by paying an amount of 9,60,000 rupees, number two. And it is also given that fair value of net assets of the acquiring company is equal to 8 lakh. Fair value of net assets of acquiring company is also given to you. You are being asked to compute the amount of goodwill and pass entries in the books of FX Limited. Now that should not pose you any trouble. You should be in a position to do this particular question very easily. First of all, what you are supposed to do, in fact, just to make it a little bit understandable, first of all, you are going to note down the net assets. Total net assets. Whenever I say net assets, you can also write net identifiable assets. You can also write NIFA. NIFA means net identifiable asset. As I have written here, 100% of identifiable asset. That means total 100%. That means 100% of 8 lakh. Total net assets on the date of acquisition of acquiring company is equal to 8 lakh. So net assets on the date of acquisition. Net assets on the date of acquisition. On the date of acquisition of acquiring company in this case is MX Limited, is equal to 8 lakh, correct? And so many times I've already told you, after writing this, you need to actually pluck out the share of NCI. Now, here I will write NCI. Nothing is mentioned in the question whether NCI is being measured at fair value or PSNA basis. And I've already told you so many times, if nothing is mentioned, then you better actually go for PSNA approach. So NCI on PSNA basis. So NCI on PSNA basis. Now you let me know what will be the value of NCI that will be equal to 0. The reason being is that in this case you are acquiring 100% control. So there is no question of NCI. So that means entire 8 lakh worth of asset belong to acquirer. So acquirer's share of net assets. Acquirer's share of net assets will be equal to 8 lakh. And now you compare it with the amount of consideration transferred. As you have already seen, the consideration transferred is equal to 9,60,000. So I'm going to write here 9,60,000. And the difference will be equal to goodwill. Because the amount of consideration is more than the amount of share of net assets, so difference will be goodwill. That is equal to 1,60,000. So 1,60,000 is the amount of goodwill. Now you are supposed to pass the entry also. So you can pass the entry. Your entry will be like this. First you write the net assets, or you can write identifiable net assets, 8 lakh, number one. Logically, then you should write 2 NCI. Now, NCI is not given in this particular question. Then you write 2 cash. In fact, if you do not want to write 2 cash, you can simply write 2 consideration payable. Because nothing is mentioned in the question whether consideration is payable in cash or in shares. So always presume that it is payable in cash. Correct? So 9,60,000 and your difference will be equal to goodwill. Is it clear to you? This is how you are going to pass the entries in this particular case. You can pass the entry this way around. Net assets account debit, I have already told you. 8 lakhs. After writing the net assets, because when you are writing net asset, it means asset minus liability. Then you make a habit of writing 2 NCI. Although in this particular question, NCI is not given. Then you write here 2 consideration payable. Consideration payable is equal to how much? That is equal to 9,60,000. 9,60,000. Now you take the difference. The difference is equal to 1,60,000. This will be your goodwill. Is it clear to you? And it is always better to supplement the entry with this also. Consideration payable account debit. Consideration payable account debit to cash account, because nothing is mentioned in the question. So you are presuming that consideration is being paid through cash. 9,60,000, 9,60,000. This is how you need to pass the entry. Is it clear to you or not? Clear? Now we move over to question number 2.2. Now in this particular question, what is given? Just allow me to have a sip of tea also. Now tea has become almost like a cold drink. 2.2. On 31st of March 2023, K9 Limited acquired L5 Limited. And here it is written that K Limited issued 60,000 shares of 10 each at par value. And further it is given that were trading at 240 on 31st of March 2023 it means. The book value of L5's net asset was 72 lakh. The book value of your acquiring company, the name of the acquiring company is actually L5, and the book value of the net asset is equal to 72 lakh. And on 31st of March 2023, the fair value of the net asset was assessed at rupees 135 lakh. Important point is this. You must understand that in this particular question, you are K9 Limited, number 1. It is always better to analyze the question somewhere in the rough. Then chances of committing the mistake get reduced by a huge margin, to be very honest with you. On 31st of March 2023, K9 Limited acquired L5 Limited. So now you know the name of the acquiring company. The name of the acquiring company is this one. And you are acquiring this particular entity. It is mentioned this way around. We presume that this is the date on which we acquired this particular entity. Now you must have noticed actually in this particular question, it is not given percentage of stake. It is simply given that you are acquiring this particular entity. So you will presume in this case also that you are acquiring 100% control. That means if percentage stake is not given, in that case we always presume that we are acquiring entire share capital of the other entity. Now it is also given that we are going to issue purchase consideration by way of shares, and we are going to issue 60,000 shares. It is given in the question. It is also given that face value of the share is actually 10, but at the same time market value is 240. That means I have already told you, and we did a question today itself, and wherein I told you whenever we are going to compute the purchase consideration, we are going to multiply the number of shares with the market value. Now the market value in this particular case happens to be 240, so I'm going to multiply it with 240. So this is what I'm going to get. I think it will be equal to 14,40,000. So 14,40,000 will become my purchase consideration. Is it clear to you? Also given in this particular question that on the date of acquisition, some information is given with respect to net assets of your acquiring company. It is given in the question that on the date of acquisition, net assets were there and having a book value of 72 lakh. book value of the net asset is 72 lakh, but we are not concerned with the book value. We are more concerned with the fair value. And it is given also that the fair value of the net asset is equal to 135 lakhs. So you have opened the question and it will help you in solving it quite easily. So I want you to develop these habits. I'm not telling that you cannot do this question. I know very well that you can do it within a flick of a second, but still I would love you to actually understand all these things. Show the acquisition journal entry. Actually, question is simply asking you to pass the entry, but still I want you to learn something extra. So if you want to solve this particular question, what and how you are going to actually solve it, as I told you, first of all, always make a habit of writing this way around. NIFA. NIFA means net identifiable asset. Indirectly, it means net assets. So NIFA, when I say NIFA, it means net assets of L5 Limited. L5 Limited is acquiring company. Net assets of acquiring company on the date of acquisition. On the date of acquisition. On the date of acquisition, net assets is equal to 135 lakh. We have to take into account the fair value. Remember one thing. Correct? Not the book value. 135 lakh is the what we call fair value that is given to us. And then I'm going to take into account NCI. I have to wipe out the share of NCI, but problem is that again in this question there is no question of any NCI because we have already presumed that 100% stakes have been acquired by us. So entire 135 lakh worth of net asset belong to acquirer. Acquirer share. What was the name of the acquirer? K9's share. K9's share, that is acquirer share. Acquirer share of net asset is equal to this much. Now you simply compare it with the consideration transferred. Now consideration transferred will be equal to 60,000 shares because you are offering 60,000 shares and you quite obviously you are going to offer them at the rate of 240 because the market value per share is 240. 60,000 into 240, I think it is equal to 144 lakh. So even in this case, the amount of consideration is exceeding the share. So difference will be your goodwill and goodwill will be equal to 9 lakh. So amount of goodwill will be equal to 9 lakh. Is it clear to you? And you can pass the entry very easily. So net assets, whenever we write net asset, it means asset minus liability. On the date of acquisition, net asset is equal to 135 lakh. Now, as a rule, I should write 2 NCI. That's a different matter that in this particular question, NCI is not there. Then I'm going to write here 2 consideration. Now, consideration payable is 144 lakh, as I just told you. 144 lakh. And the difference will be equal to goodwill. That means I could have driven out goodwill simply by passing this particular entry, 9 lakh. Correct. This is my first entry. I told you when you write this entry, supplement it with this one also. So in this case, your next entry will be consideration payable 144 lakh, 144 lakh, consideration payable. Then you write here 2 share capital, 2 share capital. Correct. 2 share capital. And because you are offering 60,000 shares, you are offering 60,000 shares. And the face value of the share is 10. So you are going to write here 6 lakhs. And then you will write here 2 security premium because you are issuing share of rupees 10 each at the rate of 240. That means the security premium is equal to 230 per share. Isn't it or not? So your next entry will be equal to 60,000. Sorry, security premium amount will be equal to 60,000 into 230. And it will be equal to 138 lakhs. So this is how you are going to actually pass the entries. Is it clear to you or not? Now we move over to 2.3. Let's see actually what is given in this particular question. Here it is given A Limited acquires 80% of B Limited for 9,60,000. Now in this question you are being given there is an entity A Limited acquires 80% of the control of B Limited Amount is 9,60,000 paid by equity shares. So this time the consideration is paid by way of equity shares at par. Further, it is given fair value of B's net assets at the time of acquisition amounts to rupees 8 lakh. Now, it is also given that fair value of net asset is also equal to 8 lakh. Question looks pretty straight. There is no problem. There are neither any twists nor any turns. Further, it is given required. You are supposed to compute non-controlling interest and goodwill. Question simply is stating that you are supposed to compute what we call non-controlling interest and goodwill, and you are supposed to pass the journal entries in this particular question. Question is simply asking you to compute this way around. But just to make you understand better and thoroughly, actually, I want you to learn something extra than what is being asked, actually, correct? So in this question, even though this question is very innocuous, very simple, but still you kindly pay attention. This is your 2.3. Now in 2.3 we have already seen actually that company A is acquiring 80% control, PC is actually 960 and it will be discharged by way of equity share and fair value is 8 lakh. Everything is given in a very straight manner. So as usual, first of all, I write here NIFA. NIFA means net identifiable assets of B Limited, that is acquiring company. I'm not writing on the date of acquisition. It always means on the date of acquisition. Now it is given to you as 8 lakh. So I'm going to write here 8 lakh. Correct? From there on, I'm going to subtract NCI. Since it is not given in the question whether the NCI need to be computed at fair value or on PSNA approach. So I'm going to value NCI on PSNA approach. Proportionate share of net asset approach. If I am going to value NCI on PSNA basis, what I need to do, the net asset is equal to 8 lakh. I will have to multiply it with the proportion of the NCI. Our proportion is 80%. So the proportion of NCI will be equal to what we got 20%. So 8 lakh into 20% will be equal to 1,60,000. So 1,60,000 will be the NCI. After subtracting the share of NCI, now we get 6,40,000. Obviously, this 6,40,000 reflects the share of acquirer, correct? So share of acquirer, that is A Limited. Share of net assets of A Limited is equal to 6,40,000. Now we are going to compare it with the amount of consideration transferred. It is given in the question that consideration transferred is equal to 9,60,000. So I'm going to write here 9,60,000. Then difference will be equal to 3,20,000. 3,20,000. Kindly show a bit of patience because I will tell you many more things in this particular question. Our solution is over because question is simply asking us to compute the amount of goodwill and pass the entry. I can pass the entry also, but correct. This is 3,20,000, no doubt about that. Now suppose here I have computed NCI on PSNA basis. Suppose if I would have had computed NCI on fair value basis, suppose, correct? Then what would have been the amount of goodwill? Because right now by computing NCI on PSNA basis, we are computing the amount of goodwill as 3,20,000. Is it clear to you? So in order to make you understand a little bit extra, now what I am doing, just pay attention, just allow me to have a bit of more space, correct? Now I will take NCI on fair value basis. It is not needed, it is just for understanding. So NIFA is 8 lakh, NIFA is 8 lakh. And now I am going to write here NCI on fair value basis. Now I will compute the NCI on fair value basis. On fair value basis. NCI on fair value basis. First of all, how I am going to compute the value of NCI on fair value basis? I have told you now on several occasions that whenever you need to find out NCI on fair value basis, always take into account the proportion of acquirer. Proportion of acquirer is 80%. And for 80%, how much acquirer is paying? Acquirer is paying 9,60,000. So that is considered as fair value of 80%. So we need to find out the fair value of 20%. So fair value of 20% will be equal to this much. 20 into 9,60,000 divided by 80. This is how you are going to find out what we call the value. 20 divided by 80, that is equal to 1/4. And if I'm going to divide 960 by 1/4, that will be equal to 2,40,000. So NCI, you must have noticed, on PSNA basis was just about 1,60,000, while on fair value basis it is 2,40,000. So in this case, share of A Limited, that means share of net assets of A Limited, share of A Limited in the net assets will be equal to this much. So I will have to subtract from 8 lakh, 2,40,000. I will get, I think, 5,60,000. 5,60,000, correct? 5,60,000 is the share of acquirer in the net assets. Quite obviously, now I am going to compare it with the amount of consideration. And if I am going to write here the amount of consideration, you must have noticed that consideration is equal to 9,60,000. So I am going to write here 960. And whatever balance I am going to get, that will deliver me goodwill of 4 lakh. I need not require to pull your attention towards this particular fact that whenever we are going to get goodwill, correct? Whenever we are supposed to compute goodwill, definitely the amount of goodwill will differ, correct, as per the basis of computation of NCI. For instance, if I am going to compute NCI on PSNA basis, you have seen already that our amount of goodwill is just about 3,20,000, isn't it or not? Whereas when we compute it NCI on fair value basis, the amount of goodwill is 4 lakh. But, pay attention. This is not sufficient. As a professional student, you need to understand many more things so that it lends you an edge later on when you enter into your practical arena. Just pay attention. I will tell you something which is generally not known to many. At least by now, you are well aware of this particular fact that actually just allow me to have a bit of more space in the reason, because I will require this space for the later on questions. So what I will do, I will move horizontally. So by now, at least you are well aware, as I told you, that NCI can be measured on PSNA basis and on on PSNA basis and on fair value basis. NCI can be measured on PSNA basis and NCI can be measured on fair value basis. We know all these things, correct? When we are going to compute NCI on PSNA basis, correct? In that case, whatever amount of goodwill which we get, for example, in this question, when we computed NCI on PSNA basis, NCI was 1,60,000, and if you remember, the goodwill was 3,20,000. When we take NCI on PSNA basis, in that case, whatever goodwill which we derive, that is known as partial goodwill. It is known as partial goodwill. Partial goodwill. It is known as partial goodwill. What we mean by partial goodwill, that I will explain, but it is known as partial goodwill. For example, in this particular case, here 3,20,000, this is known as partial goodwill. It will be known as partial goodwill. You need not require to write it, but you must understand. It is known as partial goodwill. And when we compute NCI on fair value basis, in that case, when we get goodwill, this is known as full value of goodwill. This is known as full value of goodwill. Full value of goodwill. Full value of goodwill. It is known as full value of goodwill. Correct? Now, what we mean by partial goodwill, full value of goodwill, I will explain that also. So, at least by now, you are well aware that when we take NCI on fair value basis, in that case, as I just told you, whatever amount of goodwill which we are going to derive in that particular case, it is known as full value of goodwill. Full value of goodwill. Full value of goodwill. It is known as full value of goodwill. Correct? Now I will try to make you understand. Actually, many a time a student, although they never ask, but I know what is boiling in their heart and in their mind, correct? Even though we tell, and most of the fraternity will tell you simply, or the faculty would tell you, teaching fraternity would tell you, that there are two methods of what we call NCI valuation, PSNA approach, and besides that, fair value approach. Obviously, the amount of goodwill will differ, but they never tell you the logic. And here I am going to tell you the logic, and I will tell you that ultimately it is not going to play any impact in the financial statement. Whether we have taken NCI on fair value basis, I've already told you it is the choice of the entity. So whether entity has gone for PSNA basis or fair value basis, ultimately it is not going to have any effect in the financial statement. I will prove it now. Just pay attention. Let us presume that we have computed goodwill, and in order to compute the goodwill, let us say NCI was valued on PSNA basis, correct? Now ultimately we will have to prepare the consolidated balance sheet. I have already told you, and we have already seen how the consolidated balance sheet is prepared in the initial session. Consolidated balance sheet, because this is our ultimate target, preparation of the consolidated balance sheet, correct? As you know, assets are written first and then equity and liabilities will be written, correct? In the consolidated balance sheet, we will write the amount of goodwill. As we saw that amount of goodwill was 3,20,000 under PSNA approach. When we computed NCI on PSNA approach, the amount of goodwill was 3,20,000. Ultimately, I will have to show the amount of goodwill in the consolidated balance sheet, isn't it or not? And besides that, you have already seen that NCI is also reflected in the consolidated balance sheet, and the amount of NCI is equal to 1,60,000. Correct? When we say it is partial goodwill, it is partial goodwill, what does it mean? It means this entire goodwill belongs to parent. 3,20,000. When we say this is partial goodwill means this goodwill belongs to, in this case I will write A Limited, that means acquirer. Entire amount of goodwill which is reflected here, correct? And remember this thing, this is a partial goodwill. So what we mean by partial goodwill? Partial goodwill basically reflects the share of acquirer entity. This entire goodwill 3,20,000 shows that it belongs to acquirer entity or the parent entity. Now just pay attention here. Now suppose I will prepare consolidated financial statement, correct? Consolidated financial statement under this version. Consolidated financial statement. Asset side, equity and liability side. Now in this case, when I computed NCI on fair value basis, we saw that amount of goodwill was equal to 4 lakh. Here it is 4 lakh. I have already told you this 4 lakh. This time goodwill means full value of goodwill. This is our full value of goodwill. Correct? And obviously we are going to write NCI. In this case, NCI, because we computed NCI on fair value basis, the amount of NCI was 2,40,000. 2,40,000, isn't it or not? So some of the students actually get unnecessarily botheration actually I have seen. So I will erase out that botheration. You will never ever have any problem later on. Now just pay attention here. Actually both these scenarios are absolutely same. Some of you might say, sir, here you have written goodwill 320, NCI 160, and in this case goodwill is 4 lakh and 250. How can both these items be same? I will tell you. Full value of goodwill means the goodwill which is appearing in the consolidated balance sheet it means this is full value of goodwill. That means some portion of the goodwill belong to parent and some portion of the goodwill belong to acquiring company. For example, in this case, 80% is our share and 20% is share of NCI. So you can see if I'm going to compute 80%, that will be equal to 3,20,000. So 3,20,000 will belong to parent and 20%, that means 80,000 will belong to NCI. 80,000 will belong to NCI. So even in this case, you can see actually 3,20,000 is our share. And here also 3,20,000 is our share. That's a different matter. We have reflected goodwill at 4 lakh, but it means 3,20,000 is our share. And 80,000 is share of this NCI. Now, because share of NCI is 80,000 and you have written it towards the asset side and amount of NCI you have written towards liability side 240. That means 80,000 is written related to NCI on the asset side. And NCI towards the liability side is 2,40,000. Now, if you are going to take the difference, 80 minus 240, it will come to 160. That is why I am telling you, ultimately, it will not have any effect in the financial statement, whether we compute NCI on fair value basis or on what we call PSNA basis. Ultimately, the net effect is always the same. And this is what exactly I wanted to prove. And that is why I keep on telling you to make a habit of writing, and which most of you never do that, unfortunately. So when we write, correct, it gives us a little bit more confidence to understand, and whenever we write in our own handwriting, correct, it is generally said that you remember it better. So anyway, now we move over to question number 2.4. Let's have a look over this particular question, 2.4. In this particular question, let us see what is given to us. Here it is given that Jet Limited acquired 60% interest in P Limited on 1st of January 2023. And here it is given that Jet Limited paid 700 lakh in cash. So far in this particular question, you have already noted that there is an entity by the name of Jet Limited. It acquired 60% control, correct, in P Limited. And it is also given that PC is equal to 700 lakhs and PC will be paid in cash. In cash. The value of the net asset is 1,800 and fair value of the liability is 900. Fair value of the asset of P Limited is 1,800 and liability is this. That means fair value of asset is given to you as 1,800 and fair value of liability is equal to 900. So that means net asset is equal to 900. Fair value of the net asset is equal to 900 of your acquiring company. Now question asks, or question says that provide journal entry for the acquisition using Ind AS, assuming that P Limited does not wish to report NCI at fair value. So here it is given that Jet Limited instead of P Limited should be Jet Limited, correct? Now important point here is that the acquirer entity is not interested in reporting NCI at fair value. Indirectly, it means you are supposed to compute the NCI at PSNA on PSNA basis. So now you can easily do this particular question. I have already told you that on the date of acquisition, net asset is equal to 900. First you write net assets 900. Then you will have to find out the share of what we call NCI in order to compute NCI on PSNA basis, because you have got hold of 60%, 40% will be NCI. So 40% of 900 will be equal to 360. Remaining 540 will belong to, I need not require to tell you, acquirer. So share of acquirer in the net asset is equal to 540. And then you are going to compare it with what we call consideration. Amount of consideration is more than the share. So 160 will be amount of goodwill, correct? In this question, actually you are supposed to do only till up to this particular point. But still, suppose if I would have had computed NCI on fair value basis, correct? Suppose. First of all, what would have been the value of NCI on fair value basis? NCI on fair value basis. NCI on fair value basis. Suppose if I would have computed NCI on fair value basis, How I would have computed? First of all, I would have taken into account the stakes of the acquirer. Then I would have compared it with the amount of purchase consideration. The amount of purchase consideration given is 700 lakh. So indirectly it means fair value of 60% is equal to 700. So what will be the fair value of 40%? So fair value of 40% will be equal to 40 into 700 divided by 60. That is equal to 467 approximately. So NCI in this case will be equal to 467, and then you can easily find out what we call the rest of the things. 900 net asset, NCI on fair value basis is 467, and then difference 433 reflects the share of net assets of the acquirer. Compare it with the consideration. Amount of consideration is more, so the difference will be goodwill, 267. And then you can pass down the entry also, which I have written. Instead of writing to capital, you better write to consideration. Although you can directly write capital also, but I want you to write this in this manner, to consideration payable. And then you pass another entry, consideration payable account debit to share capital. I think you are offering shares in this particular case. No, in this case you are offering cash. So your next entry will be consideration payable account debit to cash account. Correct? So you can manage this question of your own quite easily. Now we move over to 2.5. As far as 2.5 is concerned, this question again should be a cakewalk for you and should not pose you any difficulty. Correct? I think you should be in a position to do this question number 2.5. On 1st of January, M Limited acquired 80% of the equity interest of P Limited in exchange of 250, cash of 250. That means we are acquiring 80% control, number one. Purchase consideration number two happens to be 250. Identifiable assets are measured at 350 and identifiable liabilities are 50. So 350 minus 50, 400. And the fair value of 20% non-controlling interest is 43. Everything is given in the question. You are already given that fair value of non-controlling interest is 43 because your stake is equal to 80%. So 20% will be non-controlling interest in this particular case. Isn't it or not? So here there is no problem. First of all, you will write the net assets. Assets is equal to 350. Liability is equal to 50. So net asset is 350. And NCI on fair value, because it is already given in the question, is 43. So difference will be equal to 257. This difference shows the share of net assets of acquirer. You compare it with the consideration. Consideration is 250, but in this case, amount of consideration is less. Correct? In comparison to share of net assets. So difference will be your gain on bargain purchase. And then you can pass the entry. First you write asset account debit because in this question assets are given separately, liability are given separately. First write asset account debit, then write liability account. Correct? That means you have already recorded net assets now. Then you write here, in fact I will pass the entry separately just not to confuse you. Your entry will be asset account debit. You are acquiring assets worth rupees 350. You are acquiring assets worth rupees 350. Number one. Number two, because assets and liabilities are given separately, it is always better to write them separately. Liability is equal to 50. Then you write NCI. You computed, in fact, value of NCI was already given straight away, 43. And then you write here to consideration payable. Consideration payable is equal to, in this particular case, 250, and now you take the difference. The difference is actually gain on bargain purchase. That is equal to 7. And then you pass another entry to discharge the amount of consideration. Consideration payable account debit. Consideration payable account debit to cash account. Consideration payable account debit to cash account, and that is equal to 250. So this is how you need to pass the entry. Is it clear to you? Actually, you can directly write cash because you are delivering the consideration cash, but still I would love you to follow this approach. and then 2.6. We come over to 2.6. Now, in this particular case, you are being given on 1st of January 2023, Hansa Limited acquired 70% of the equity interest of Nainital Orchards in exchange of cash consideration of 700 lakhs. Now, what is happening in this particular case? There is an entity by the name of Hansa Limited. Correct? Hansa Limited. And Hansa Limited is acquiring 70% of the stakes in Nainital Orchards Limited. Nainital Orchards Limited. Also, it is given that PC is 700 and PC will be given by way of cash. Net identifiable asset of Nainital Orchards Limited. Asset is equal to 1,500 and liability is equal to 600. Liability is equal to 600. So difference will be equal to 900. So nothing else in this particular question. Actually, question is simply asking you compute NCI at fair value and goodwill, and then compute NCI on PSNA basis, and again you have to find out the amount of goodwill. This is the demand of the question. Is it clear to you or not? So in this particular question, when I'm going to take into account NCI on fair value basis, correct? First of all, I will write 900, then you will compute NCI on fair value basis, which it will be equal to 300. How you compute it? NCI on fair value basis. For 70%, purchase consideration is 700. So for 30%, the fair value will be equal to how much? It will be equal to 300. This is how you have computed. Is it clear to you? So balance 600 means share of acquirers net assets. You are going to compare it with what we call consideration, which is 700. Amount of consideration is more, so that is why 100 will be your what we call goodwill. Then accordingly you can pass the entry. Now you know how to pass the entry. Now suppose if NCI is valued on proportionate share of net asset basis. Your net asset is 1,500 minus 600, that is 900, and proportion of NCI is 30%. So 270 lakh will be the value of NCI on PSNA basis, correct? Then from the net assets of 900, you will subtract NCI share. So acquired share will be equal to 630. And then you compare it with consideration. This time you will have a goodwill of 70 lakh. Is it clear to you or not? Similarly, now there is another question 2.7, and before we attempt 2.7, we'll take a break of what we call 5 minutes so that we can do it comprehensively. Just a break of 5 minutes, and then we'll join you again. So welcome again. Now we will do question number 2.7 and I want you to understand this question quite well, so I will do it for you. Actually, question is not tough, but it is a little bit difficult to comprehend this question. That's the reason actually I'm doing it for you. In 2.7, what is given to us, let's have a look over here. Internet lag, it seems sometimes. Now it's okay. Okay, 2.7. Now here what happens in this particular question, what is given to you, actually there is a company by the name of C Limited, correct? You just pay attention over here. And it is given in the question that this company is getting 60% stake, in fact acquiring 60% stakes in company D. There is a company by the name of D. So it is acquiring 60% stake, and it is given to you in the question that consideration is actually, amount of consideration is rupees 2 lakh. Consideration is actually 2 lakh. And in this question, it is already given that NCI, fair value of NCI is actually 1 lakh. It is already given in the question, correct? Fair value of NCI is already given in the question. And later on, question will ask you, actually this question has got two parts. In part 1, it is written that presume net assets of D Limited as 2,40,000. Net assets of D Limited is equal to 2,40,000. This is also given in the question, correct? Net assets of D Limited is 2,40,000 and question is asking you what will be the amount of goodwill. In this case, when net asset is 2,40,000, what will be the amount of goodwill if NCI is measured on, if NCI is to be measured, if NCI is to be measured on fair value basis and PSNA basis. This is the demand of the question in part 1, correct? If net assets of D Limited is equal to 2,40,000, then what will be the amount of goodwill if you are going to compute NCI on fair value basis and on PSN basis? Similarly, second part of the question states that if net assets is equal to 3,30,000, if net assets of D Limited is equal to 3,30,000, 3,30,000, then what will be the amount of? Then what will be the amount of goodwill? What will be the amount of goodwill if NCI is measured on fair value basis and PSNA basis? So this is the question. Actually, question is not tough, but to understand the question was little bit complicated task. So this is the question that you are acquiring 60% stakes. Consideration is 2 lakh and it is payable in cash. NCI on fair value basis is already given to you, and question is asking you, we will take up first this part, when net asset is equal to 2,40,000, correct? So in order to solve the question part 1, this is your part 1, when net assets of D Limited is equal to 2,20,000, when net asset is equal to 2,40,000. Now, if net asset is equal to 2,40,000, we have to find out the amount of goodwill when NCI is valued at fair value basis and at PSNA basis. So, even under this part, first I write goodwill when NCI is measured on fair value basis, measured on fair value basis. So if you are going to measure NCI on fair value basis, what will be the amount of goodwill? I need not require to tell you. You can easily do this question of your own, isn't it or not? Because now you understand the repercussion of the question, so you should be in a position to do the question. First you write the net assets, NIFA, net identifiable asset, which is given to you as 2,40,000. You simply write here 2,40,000. Subtract NCI share, NCI on fair value basis, NCI on fair value. Actually, NCI on fair value basis is already given, 1 lakh in the question. Value of NCI, fair value, is already given to you. So you are left up with 1,40,000. So 1,40,000 will be acquirer's share. Correct? Acquirer's share. So acquirer's share is equal to 2,40,000. Compare it with the consideration. Amount of consideration is 2 lakh. So your goodwill will be equal to 60,000. In this case, your goodwill will be equal to 60,000. Is it clear to you or not? In this case, amount of goodwill will be equal to 60,000. And if net assets are 2,40,000 and NCI is on PSNA basis, NCI on PSNA basis, on PSNA basis. So once again, I am going to write here NIFA, net identifiable asset, that is equal to 2,40,000. Now I am going to find out NCI on PSNA basis. Now NCI will be equal to 40% of 2,40,000 on PSNA basis. 40% is the proportion of NCI. So 40% of net assets will be equal to this much, 96,000. Rest of the asset belong to acquirer, 1,44,000. Acquirer's share, that will become acquirer's share. Acquirer's share. Acquirer's share is equal to 1,44,000. Now you subtract consideration. Consideration is 2 lakh. So in this case, you can see amount of consideration is still higher. So 56,000 is your goodwill. So this is solution to part 1, when net assets were equal to 2,40,000. In the second part, when net asset is equal to 3,30,000. When net asset is equal to 3,30,000. In this case, what will be your answer? First, NCI on fair value basis. So what will be the amount of goodwill? So you will solve it in the similar fashion. First of all, you are going to write here net identifiable asset 3,30,000. 3,30,000. Then you subtract NCI. So NCI on fair value basis is already given in the question, 1 lakh. So this time 2,30,000. 2,30,000 will be acquirer's share. Isn't it or not? So acquirer's share will be equal to this much. Acquirer's share. And now you compare it with consideration. And consideration amount is equal to 2 lakh. So in this case, we are having 30,000, but this 30,000 will be gain on bargain purchase because consideration amount is lesser than the share. So gain on bargain purchase will be equal to 30,000 in this particular case. Now if you are supposed to compute NCI on PSNA basis, NCI on PSNA basis, PSNA basis. Now if I am going to compute NCI on PSNA basis, in this case, amount of goodwill will be equal to, first I will write here NIFA, net identifiable asset. Net identifiable asset is equal to 3,30,000. Correct? And I am going to subtract NCI. Share of NCI is 40% and 3,30,000. 3,30,000 is NCI. So 40% of this is equal to 1,32,000. So NCI on PSNA basis will be equal to 1,32,000. Then difference will be equal to 1,98,000. This difference is acquirer's share. Difference is acquirer share. This is your acquirer share. Compare it with consideration. Consideration transferred is 2 lakhs. So even in this case, consideration is higher, so your difference will be goodwill, 2000. So this is how you are supposed to do this particular question, correct? I told you, question was not tough, but it was little bit what we call complicated to comprehend this particular question, so that's why I did it for you. Then coming over to 2.8, now in this particular question, it is given that W1 Limited acquires S1 Limited by purchasing 60% of its equity for rupees 15 lakh in cash. So this time you are acquiring 60%. Fair value of NCI is determined at rupees 10 lakh. Now in this question, 60% shares you are acquiring, consideration is 15 lakh, NCI on fair value basis is 10 lakh. Now here it is given the net aggregate value of identifiable asset and liability, that means net assets, as measured in accordance with Ind AS 103 is determined at rupees 5 lakh. That means in this particular question, you are being given that net assets on the date of acquisition is equal to 5 lakh. Now the point is that if I am going to subtract NCI, and NCI on fair value basis is already given, share of NCI is given as 10 lakh, whereas net assets are 5 lakh. So that means acquirer share is minus 5. Acquirer share is minus 5. Acquirer's share is minus 5. And you are subtracting consideration. An amount of consideration is 15 lakh. You are subtracting 15 lakh. See, if I am going to subtract 15 lakh from minus 5, I will get minus 20. So that means this minus 20 is nothing but goodwill. That means goodwill is equal to 20 lakhs. So in this case, there will be goodwill of 20 lakhs. And this is how you are going to pass the entry. Net assets 5 lakh. Then you write 2 NCI. You will write here 2 NCI, then write 2 consideration, and the difference will be equal to goodwill. You can straightway compute the amount of goodwill. Then we have in this case 2.9. In 2.9, it is written that K1 Limited acquires K2 Limited by purchasing 90% of its equity share for rupees 900 lakhs in cash. Fair value, in fact, this line is not given. This, cut it out. Further, it is given, the management have elected to adopt full goodwill method. The management have elected to adopt full goodwill method and to measure NCI at fair value. You know that whenever we compute NCI on fair value basis, then the goodwill which we derive, that is known as full value of goodwill. So in this case, management is interested in finding out full value of goodwill, and indirectly it means they want to compute NCI on fair value basis. The net aggregate value of identifiable asset and liabilities measured in accordance with Ind AS is equal to 1,200 lakhs. So it is a simple question, should not pose you any difficulty. Net asset is equal to 1,200. Net asset is equal to 1,200. You have to find out NCI on fair value basis. Now NCI on fair value basis, how you are going to compute? You have acquired 90% stakes. For 90% stakes, you are offering 900 lakhs. So what will be the fair value of 10%? Because your proportion is 90%, proportion of NCI will be 10%. So 10 into 900 divided by 90. So that means NCI will be equal to 100 on fair value basis. So balance 1,100 shows acquirer share. Acquirer's share. Acquirer's share. This is acquirer share 1,100. And now you compare it with consideration. Consideration is 900 lakhs. Now amount of consideration is lesser than 1,100. So in this case, there will be gain on bargain purchase. gain on bargain purchase of rupees 200 lakhs. Correct? Gain on bargain purchase 200 lakhs. 2.10 W1 Limited recognizes 100% of identifiable net assets on the acquisition date and decide to measure NCI on proportionate share basis of S1 Limited's identifiable asset. What does it mean? It means W1 Limited recognizes 100%. We always recognize 100%. Whenever we take 70% control, 80% control, or whenever we have majority stakes, we always take all the assets and liability. You should not confuse that you are acquiring 100% stakes. Indirectly, it means you are taking over all the net assets. And because it is given NCI stake is 40%, indirectly it means your stake is 60%. Correct? Now further it is given net assets of S1 Limited on the date of acquisition at fair value is equal to 5 lakh. And consideration payable, kindly rectify it. This is 15 lakh. Consideration is 15 lakh. Now in this question, your net asset is net assets on the date of acquisition, you have already noticed, is equal to 5 lakh, only 5 lakh. And if I am going to compute NCI, now NCI on PSNA basis I am going to compute 40%, because it is given in the question, decide to measure NCI, and given that 40% stake on the proportionate to identifiable assets. So 40% of identifiable asset is equal to 5 lakh. So that is equal to 2 lakh. NCI on PSNA basis will be equal to 2 lakh. So acquirer share will come to 3 lakh. Acquirer share. And now you compare it with the consideration. The amount of consideration is 15 lakh. So consideration is more. So 12 lakh will be equal to goodwill. Correct? And finally, there is one question, 2.11. Since every question is given in a solved manner, but I would like you to do this question of your own. So after having finished this particular topic, we will move over to section 3, and which it is a very critical topic, very important, and perhaps the most important topic out of all the topics available. Correct? Because lots of questions have been asked in the examination from this particular topic. So we'll cover up that one in the next session. And as you know, we do lots of questions. Now let me tell you, some of you might be actually worried otherwise. Whatever classes which we will consume, correct, most of the classes will get consumed only in covering Ind AS 103, that is business combination. This chapter, Ind AS 103 business combination, honestly speaking, in between 20 to 22 classes we will require to cover, because lots of topics are there. We will also cover internal reconstruction along with that. Remember one thing, correct? And similarly, Ind AS 110. Ind AS 110 will consume near about, you can say, 15 to 20 classes. I have already told you, maximum number of classes. And then we will take up share-based payment, that is Ind AS 102, share-based payment. Now, as far as share-based payment is concerned, we may require at least, you can say, in the vicinity of 5 classes. Correct? And then after that, we will do valuation of goodwill. Valuation of goodwill, we won't take more than 3 classes. Similarly, valuation of shares, hardly 3 classes. And then financial instrument, it will be covered in 3 classes. You have seen that rest of the chapter will not need much or many classes. And then economic value added, hardly 1 class, maximum 1 class. Valuation value added statement, it will also require maximum 1 class. So whatever number of classes which we will need only for these 2 chapters. So you need to require to worry on that particular count, correct? As you must have noticed, we are giving you absolutely fresh branded recordings. So you need not require to worry on that particular count. But important point is that we have to cover each and everything with great depth, a lot of with insightful thoughts. So on that count, we take leave of you. Hope you are enjoying the classes and keep on actually acquainting us with your valuable feedback. So on that count, we take leave of you. Good night from here.